Welcome to another Market Matters weekly video. I'm Nicholas Forsyth, Director at Market Matters, and I've got James Garish again with us, Chief Market Strategist at Market Matters. Now James, this week, the big thing at the moment is people talking about banks or resources post the election, post the Trump victory. Now, what are we doing? Do we favour one over the other?
Both sectors have been in focus. It's two different reasons.
Mm-hmm.
Obviously, post the election, there's been a lot of focus on growth.
Yep.
So resources have come into focus. They're now, splashed on the front pages of the newspaper.
Mm-hmm.
Banks more around the discrepancy between what long-term interest rates are doing and what shorter-term interest rates are doing. So they've both got different factors supporting them. They've clearly been in focus over the last week or so.
Awesome. And on the banking front, we own a few banks in the portfolio. We have lightened our holdings recently. Under Trump, inflation, do you think this is a good thing for banks and bank earnings moving forward?
It is, right. It's going to be massively positive for the banks. I mean, one of the big things around banks has been the margin pressure that they've had over the last couple of years. If you get that, if you get interest rates going higher, which will be the case under a Trump administration, it would seem, then you start to get some margin relief. On banks' books. So, if you tie it in from what we're doing locally, our banks haven't rallied as much as the international banks. So, NAB has rallied 3%, Westpac about 2%, ANZ about 2%, CBA's up about 6% post-Trump. But you look globally, the likes of Deutsche, JP Morgan, Morgan Stanley, etc., they're up 15, 16, 17%. So, our domestic banks have lagged, and that's why we're still there. We still like the banks, and we'd still have our exposure to them. And we've got CBA and Westpac in the portfolio.
Awesome. Now, I guess at Market Matters, where we do earn our crust, is actually picking the underlying stocks. I guess by the sounds of it, you're saying you could throw a blanket over the sector and do okay. However, do you have a particular favourite in the space at the moment? Do you think that looks better value than the rest?
It's kind of like banks within the big four in Australia, they're a little bit cyclical. So we saw ANZ have been outperforming the other banks over the last 6 months or so. They delivered a better capital position, so the market turned and started liking what Shane Elliott, the CEO of ANZ, was doing. CBA had been underperforming for quite some time over the last couple of months. That's now starting to outperform. So, CBA and Westpac to us seem reasonable. NAB's the cheapest in the sector and probably has most upside from a valuation perspective. But CBA and Westpac for us is what we've got.
Awesome. And then the other thing you were talking about before is resources. We've been in and out of resources this year. I think every time we've been in and out, we've made money. Now, I think if you read the press at the moment, a lot of people are saying resources is a great buy around here. Now, we called in the afternoon report yesterday that we think we're probably seeing a short-term top in the resources space, in particular iron ore, and iron ore was off quite a bit overnight, back to 75. Now, is there a level that we want to buy the resources, and what's our feeling around that sector at the moment?
Yeah, firstly, you're right. We turned negative yesterday afternoon. This morning we read another report about why you should be cautious on resources at this stage. So, don't forget that there's been a big flow into resources. There's been a lot of talk about growth. The US dollar has started to rally. That's going to be a headwind for resources in the very short term. So, our view is that resources have got too hot too quickly. Used Whitehaven Coal. I used it in the report yesterday afternoon as sort of as a leading indicator of that sector. That stock rallied from sub 40 cents to up above $3. We're now starting to see some insiders sell. We're now starting to see the price of Whitehaven come back, even though the underlying coal price is rallying. So, and it's just a few signs that some of the heat's going to come out of the resources sector. So, from a shorter term tactical perspective, sell resources at the moment and look for a lower entry point. So, in the weeks to months to come, and that's what we'll certainly be doing.
Okay. Is there a particular level you're looking at the likes of BHP and Rio and even Fortescue?
Yeah, I mean 8 to 10% below where it's trading at now. So if you look at BHP, it's still remaining positive above $23. But these guys, these can move pretty dramatically. So BHP was $14 at the start of the year. We're trading multiples of that now. So don't be don't be surprised to see these guys move pretty quickly. So I was looking at Rio just before coming down to do this, and Rio's had a really good run, but it's pulled back pretty sharply today and looks like it can go back to sort of $55 pretty quickly, $53 even. So there'll be some big moves in the commodity space if money comes out of it. I don't think it's a longer term view. I think we should be using any weakness as a buying opportunity, and that's what we'll be doing there.
Fantastic. And just one last thing, also mining, gold space. We've played the gold space phenomenally well, I have to say. Haven't been in it for a while. We did say Regis was buy at 350, but we kept our powder dry, and that's been a very good move. Regis got to 280 odd the other day. Is there a level, or is there something we'd have to see first before getting interested again?
Yeah, gold's all about the US dollar, so you want to see a top go into the US dollar, and that's when you'll go and put gold back into the portfolio. So the US dollar index has been holding above 100, 12-month highs. So what I see is the policies over in the US are going to be supportive of the US dollar. US interest rates are going higher. We're now at a 96% chance of a December hike, so that's going to happen. So the US dollar tracks higher in the near term. In my view, that's going to put pressure on gold in the near term. But if you get a really short, sharp uplift in the US dollar, and that's what I believe is going to put some short-term pressure on the broader commodity space. If you see that happen and we get a blow off top, then we'll be looking to put some money back into the gold space. So certainly want something on our radar.
Awesome. And just quickly before we finish, James, we've made 3 purchases in the last few days. Just wanted to get just a quick 2 points on each. First of all, Westfield, called that down from 11, now at 850 odd. The other 2 that we bought on the same day was QBE and Macquarie. Obviously with smaller portions of the portfolio. What are we seeing there? Why do we like these 3?
I was just talking about the US dollar. So the US dollar rallying, there's a positive for all 3 stocks. Westfield's been sold down 28%. I get why it's been sold down. It's obviously a quasi bond exposed to higher interest rates. But Westfield's a little bit different because it's earned 70% of its earnings over in the States, and those earnings are going to pick up under some of Trump's policies. So we like that. QBE, higher rates. The micro of that business, so the insurance side of that business, should pick up over the coming short term. And Macquarie, again, is going to benefit from what we're seeing over in the US. So 3 specific plays that have got US dollar earnings benefiting from a high US dollar.
Fantastic. Thanks again for joining us, James. Thanks a lot for your insights. I hope everyone out there who's watching this got something from it. Now, if you have any further questions, feel free to reply to this email, or conversely, you can give us a call on the 1300 number, which is 1300 301 868. Thanks again for watching, and thanks again, James.